Welcome to Real Estate Focus. I'm Calvin Law. The topic that we're going to talk about is residential insurance. My guest is Cora Yamagata. She is the owner of InsuranceLab of New England. And Cora has been in the insurance industry for about 10 years. And she's here to share her expertise with everyone. So thank you for being here and welcome.
Thanks, Calvin, for having me. I'm really excited to be here.
It's a pleasure. So in a normal transaction, before closing, when the buyers receive their commitment letter, and on the commitment letter, there is one of the conditions that the purchaser will need to purchase is the insurance for the property. And it is one of the conditions that they have to clear on the commitment as well. And that's when they contact the insurance agency or company, if you will. And that's when you enter the picture. So with that being said, what is a homeowner insurance and why it is so important to have?
Okay, yes. So I'm going to caveat this by saying that everything is subject to the specific policy limits and specifics. So today I'm speaking in a very general way.
Yes, please.
But homeowners insurance does a lot, right? It not only covers one of your largest investments, it also covers your personal belongings, in the home as well as anywhere worldwide, and your living expenses if you're displaced due to a covered loss. It also covers your personal liability or legal responsibility, if you will, on the premises and away from it. So it's very important. And as you mentioned, if you have a mortgage, they're going to require it.
Right, no doubt, because the lender would need to protect the property, and themselves as well.
Yes.
Along with, the homeowners. So,
absolutely.
Yeah, and so what does deductible means? Because there are a lot of deductibles, so it depends on the annual premium, right? And also what's covered under the policy, if you will.
Okay, so let me address the deductible first. So your homeowner's policy has a deductible. Some companies offer a disappearing deductible, but you will start with a deductible. In general, you'll see $1,000 deductible, that's most common. But also you might see something called wind hail deductible or named storm or special hurricane deductible. So that's something you want to be mindful of. And I'm going to digress a little bit and talk about the deductible since we're talking about deductibles, because I think this is really important. So if you have a wind hail deductible, say, and the home is damaged due to wind, right? That your shingles blow off or something, or a tree blows onto the roof of your house. If your deductible is 2%, and that's mandated by the company, it's not 2% of the damage, it's 2% of your coverage A, which is your dwelling coverage. So if your dwelling is covered up to 1 million replacement, it's 2% of 1 million. So that deductible is 20,000 now. And that must be paid out of pocket before the insurance company will cover anything. So that's something to be very mindful of, your deductibles. And what does it cover? So as I mentioned, it covers your dwelling, your property, liability, and living expenses. But I can break that down to categories. So you have your coverage A, B, C, D, E, and F when you look at your policy summary. Your coverage A covers the main structure. So that is, and anything that's attached to it. So it can be an attached garage, deck, porch, right? Coverage B is other structures. And I think sometimes this coverage is misunderstood. It's anything on your property that is not attached. People understand it could be a shed or a detached garage, but it's also fencing. It's your pool, hot tub, walkway, and sometimes people don't realize it's also your pavement if you have a paved driveway, so that's your coverage B. Coverage C is your stuff, right? Your personal belongings. So if you take your house, you flip it upside down, all the things that will fall out that's not permanently affixed or attached, right? That's your coverage C. Coverage D, loss of use, that's your living expenses. So it covers anything above and beyond the norm if you're displaced due to a loss. So if you normally cook your meals for you and your family, if you have your family living with you, on a daily basis, and you're displaced and you have to stay in a hotel and you have to eat all of your meals out, those meals are covered by that as well. Your liability coverage covers your legal responsibility and medical payments. It's not a liability coverage. I like to call it a good neighbor type of coverage. I borrowed that from someone. Anyway, I liked it, so I borrowed it. That's medical reimbursements for maybe a guest who helping you cook, they cut their finger, they need a stitch, or they need an x-ray, and that's what that coverage is.
So when you said covers family and stuff like that, so would pets consider family member as well?
That's a good question. That's a good question. I would consider a pet a family
lovers
member.
out there, you know?
Yes,
So, yeah.
yes. There are certain breeds that are excluded by certain companies, so that's one thing to be aware of as well. Not all companies exclude breeds. So if you have a pet that might be on that list, that's a conversation you definitely need to have with your agent. The loss of a pet in, say, a fire, that is not covered, right? You know, I mean, that's a big loss, obviously. Well, if someone trips over your pet, or maybe your pet bites someone, that will be covered under your coverage E, or liability coverage.
Yeah. I see. Interesting. So, would you recommend people to have a higher premium so then the deductible can be a little bit less? Would it be a good idea?
Well, so there's a correlation between deductible and premium, right?
Okay.
So the higher the premium, yeah, like you said, the higher deductible, the lower the premium, right? And then converse, if the deductible is lower, then the premium will be higher,
Okay.
right?
Yeah.
But there's a sweet spot, right? So I wouldn't make the assumption that if you make a big jump to a higher deductible, that it's going to be worth doing that. So that's also another conversation you should have, because sometimes you realize that by increasing that deductible a lot, you don't save a lot, so it's not worth it. So you really need somebody to go over your options for you and discuss that. But yeah, did I answer your question about the deductible?
Yes, yeah, somewhat. Yeah, I know it's a lot of detail and yeah.
It is. There are a lot of
factors,
nuances.
Yeah,
Yes.
yeah. And in each situation, each coverage and each client's expectation is different.
Absolutely.
So, you know, it's hard to go into detail. So, just general information,
Yeah.
you know, that we just talk about. So before the clients get into a policy, if you will, other than the things that you mentioned, right, the coverage and stuff like that, what are the requirements that they have to meet, you know, to get a policy? Like credit, you know, how big the property is, you know, I mean, information about the property. I mean, what are the requirements do you need in order to, you know, get the policy to meet your needs or criteria, if you will?
That's a big question. There's a lot in that question. Okay.
Yeah. Just share a few.
Yeah, so
the most important ones.
I'm going to take it apart. Yeah.
Yeah.
So regarding credit, right? So I'm just the messenger on that one, right? So there is data that shows there is a correlation between the credit score and the number of claims and the size of the claims. So when you do a home quote, a soft pull is made, right? It's called a credit-based insurance score. It's formulated. Your agent does not run, you know, they don't run your actual credit. It's something that happens behind the scenes through the quoting process, okay? Your lender won't see that inquiry. It's not a hard hit. Sometimes people are concerned about that. So that's the credit aspect. So yes, that is pulled. That's a factor in your rate. The age of the home, the location of the home, the actual coverages that you select, you know, the age of the systems. Has a roof been replaced? How old is the heating? So on and so forth. What else? What was that?
Yeah, so
it was a big
basically-
question. Sorry.
Yeah, it's okay. So
Yeah.
if somebody have a subpar credit versus somebody who have like, you know, super credit, if you will, would the premium get affected?
Yes.
Okay,
so,
it does. Okay.
So yes. So what and this is just personal. But this is what I'll do sometimes is if there is more than one named insured, I will look at which way is advantageous to the client. which will produce a better premium for them. So that's something that they can look into as well. Yeah.
First one versus cold versus first one,
Yeah.
something like that. Okay, yeah, that makes sense. What is bundle insurance?
Yeah, I like that word. So if you bundle your auto and home, say, and it can be other products as well, carriers will give you a discount, right, for bundling. The discount can be on the auto side, it can be on the home side, or sometimes you'll see it on both. That's great. The percentage varies, of course, right? And sometimes you can have your auto with one insurance company and your home with another insurance company. But if you're within the same agency, they'll allow that agency to apply a bundling discount as well. So that's
And
really
the rate will
good
be
too.
cheaper.
Oh, definitely. Yes.
Yeah, right,
yes,
right.
yeah.
So what caused an insurance policy to be canceled?
Okay. So within the first 60 days, the policy can be canceled for any good reason within the first 60 days, all right? Perhaps there's an excluded breed that was not disclosed. The insurance inspector goes out there, they see, what they perceive to be that breed, and then they will issue a notice of pending cancellation. At that point, you can work with your agent and they can see what can be done to remedy the situation so that the policy does not cancel, right? Or it can be condition of the home. Perhaps they find like lifting shingles or granulation, or maybe too much organic growth on the roof. That's another one, or the siding damage, or maybe paint. If the house is like a wood house, maybe there's paint chipping. And sometimes the condition of the other structure can dictate that as well. So it can happen for those reasons, as well as non-payment, of course. But the insurance company has the right to cancel within the first 60 days. So,
Okay.
Yeah.
Because I've heard, and I've seen as well, that let's say if the buyer told you that, hey, we're going to buy this property as our primary resident, if you will.
Yeah.
And then they turn that into an investment property, and they might not live there. So would the insurance company go out and check on it? And then if they deem that this property is an investment instead of as a primary residence, would that policy be either changed or be canceled?
Insurance companies, in my opinion and my experience, they're very reasonable. So if they find a condition that doesn't meet the original requirements of the policy, if they do offer a landlord policy, they may request that it be rewritten as such. Or maybe if it's a mistake on their part, it's a misunderstanding, there's ways that we can prove that no, indeed, it is a primary residence. Well, however, if it was written as a primary residence and it's clearly not, then yes, they can cancel based on that because it is a different policy form. You don't want a primary homeowner's policy if it's a landlord situation because the coverages, you need the right coverages. I know sometimes people are, and I really understand the thinking behind it, but sometimes people are afraid to disclose certain things because they feel that their premium will be a lot higher, but oftentimes that's not the case. It might be a little bit because it's a different form of coverage, but the worst thing is to not have the proper form of coverage, right? Because you're paying. That's so much money wasted if they're paying for the wrong type of policy, and when it's time to file a claim, there's no coverage. So everybody's working together. So it's not that the insurance company is being hard on the client. It's just everybody wants the right thing for the client. That's really what we're doing. Yeah.
Right. So it's better to have the right policy. Otherwise, if something happened, then the owners is going to pay more, right? And liability as well.
Well, yeah, there might not be any coverage at all. And even if they say maybe they're
Especially
running
fire.
Yeah, or maybe they're running a business out of the home, right? And they don't disclose that. There might not be coverage for business loss, right? And maybe property that's owned under the business, or it's really important to share accurate information with your agent.
Honesty is the best policy, right? That's
Yeah,
what I keep
always,
saying.
like in everything,
Right,
in everything
right,
in
right.
life. It really is, yeah.
So maybe this the same term what is the difference between canceling and non-renewing a homeowner insurance policy? What does that mean?
That's a really good question. So a non-renewal happens at the end of the term. So the policy term will run out until its natural renewal or expiration date, but the policy is flagged for non-renewal, so they're not going to offer it at that point. But you will be given enough notice so that you can secure other coverage. A cancellation happens midterm, right? It can happen within the first 60 days. It can happen for non-payment anytime. It can happen if they feel that there's misrepresentation or fraud. They can cancel outside of 60 days based on that. The one thing you really want to avoid is a lapse in coverage, right? Because that will impact your future premium. It will make it very difficult to obtain another policy with another carrier at a good rate, right? Yeah.
Right. That's important. So, what is flood insurance? Because I know that there are different type of flood insurance, right?
Yeah.
So, I mean, depends on how severe the flooding zone is, I would say.
Okay, so homeowners insurance does not cover flood, right? They don't cover earthquake and they don't cover flood. However, you can add on an earthquake endorsement and get earthquake coverage. The deductibles tend to be high though, like maybe, well, anyway, I won't go down that path, but flood insurance is a separate policy, right? And that's the only way you will obtain flood coverage. FEMA recently changed the way that they rate flood policies. So as of October of last year, they adopted something called Risk 2.0, and that's a whole new rating system. So all policies, flood policies that renewed as of April of this year, and new flood policies written since, are rated via Risk 2.0. The information that FEMA put out prior to adopting this projected that 23% of the current flood policies will decrease, which is good news. 66% of the policies will increase between $0 to $10 per month. 7% will increase between 10 to 20, and 4% will increase 20 or more per month, right? That's on a national basis though, right? So people will see movement in their flood premium. So what's relevant to people purchasing a new home is that if flood coverage is required, I recommend that they get a national flood quote, right? And also a private flood quote, and find out what the current homeowner is paying, because there is the option to grandfather that rate. It might, there might be a slight increase, but it's meant there's measures in place where the increase cannot be more than 18% per year, but that gives them options, right? And nowadays, flood quotes take minutes. Everything is very quick, very digital, so they can explore their options there. Yeah.
And the insurance agent will be able to give them a quote between national versus private, right? Or local,
in minutes,
whatever.
yeah.
Oh, in minutes, okay.
Yeah, spit out those quotes in minutes, and
Okay.
go over the options for them.
Good.
Yeah.
One last question. So, how can a general consumer find or locate a good and reliable agency? Insurance agents, I mean, that's what I mean.
Yeah, well, I haven't shopped for one for a long time. So, so nowadays, it's the digital age, right? So people Google, they Yelp, they read reviews, but I think beyond that, because those things, they may have some weight, but it's really asking people that you trust and really talking to that person that you're thinking about doing business with, because you have to mesh, right? You want someone that's going to explain things to you, have that patience, give you options, be transparent, look out for your best interests. That's really what it's about. You want to feel that they are looking out for your best interest, and also understand the market, right? Because each market's different, so they don't have to be in your town, but just to understand the market. People write policies in 50 states, just like they do loans in 50 states, but you just should have an agent that understands where you are. Yeah.
And this is what I keep saying, you know, I mean, a professional gotta have the heart of a teacher, if you will.
Yeah.
Yeah, so
100%.
yeah, that's why we're
Absolutely.
doing this, because
That's what we're doing.
we
Why
like to
we're
share.
doing it.
Yeah. And because a lot of consumers out there need good information.
Yeah.
Yeah, so yeah. Well, thank you so much for sharing.
Yes,
and
thank you.
hope you have fun.
Yeah, I had a great time.
Yeah, I'd love to have you back. So yeah, thank you again. Thank you. So having a proper and the right insurance coverage for your home is very important, because it is one of your biggest investments, if you will. And to protect your home, to avoid any huge loss due to devastated incidents and unforeseen accidents of the properties. So I want to thank you so much for watching, and I hope to see you next time.